Hey there, my name is Hugh, and in this video I'm going to show you a way that you can get out of hedging trades if you're wrong about the trade. And you will be wrong. There are some videos and blog posts out there that say that hedging is like a 100% guaranteed way to make money, and that is simply not true. Just like with all trading methods, there will be losses. But the great thing about hedging is that it's so flexible that you can roll out of those losses at a net profit. Now, the way I like to hedge is I want to wait for key support and resistance levels and play the bounces off of those levels. However, there can be situations where you can give into emotions, give into FOMO or the fear of missing out, and you can jump on a trend when maybe that's not the best decision. So I'm going to show you how to get out of that type of situation. And this is a way to get out of it that you might not have thought of before, or it's a little bit counterintuitive. So let's get into it. So right now there's a breakout from this previous resistance level, and it wasn't really obvious that this is going to be a strong trend because this is a lower high, although there was a higher low here. Now, if it was a strong obvious trend, you would have seen a higher high, and then you would have a higher low here also. But price is broken out, so we want to patiently wait for it to hit a resistance level, right? So I'm going to move this forward. And using simulation software like this, I'm using Naked Markets, is, I believe, the best way to learn how to hedge, because you can move things forward, move things back. You'll have a complete set of data, and you can really practice this stuff when you're not trading or when the markets are closed. So if you want more information about Naked Markets, there's a link in the description below. You can check that out. Otherwise, let's continue with this. So I'm going to move the chart forward candle by candle, and I'm going to look for somewhere to possibly go short, right? Now price is broken out, and okay, so that might be a good place. Maybe not. I'll wait a little longer. Okay, so price is really broken out. So at this point, two really big candles, price is in a strong trend. This is probably not the best place to go long, but sometimes that can happen, right? You can give into FOMO. So to illustrate that, I'm going to take a buy here. I'm going to do one standard lot, and then I'm going to move it forward. And when I hedge, I like to take profits as soon as possible because you never know where price is going to go after that, especially when you have a big trend like this. So the next candle is an instant loss, and I didn't get any profits at all. And then let's see what happens after that. Okay, so there's a huge candle there. Now, the natural inclination here for most people who hedge would be to put on a sell order, right? Because you want to protect yourself from the downside. However, when there's really strong price action like this going up, it's usually the case where the momentum will carry it up at least for a little bit further. So in this case, I actually want to buy, and I'll show you why that is in a second, but I'll just put this order on. And I always like to do the same size as the previous buy, because I don't want to be pyramiding or doing any type of martingale thing, because that's going to lead to larger losses. So I'm just going to buy one standard lot, just like the original entry. Now, once I have that order on, or once I have that trade on, I'm looking for it to at least retrace into the middle of this range, because that will be the average of these two trades, and I can get out of the trade at break even if I want. Now, if it looks like the trade's going to go further up, then I can get out. I can wait, and I can get out a little higher at a net profit. So let's see what happens here. I'm going to move forward. Okay, price pops a little bit, going back up. Okay, so if I exit there, if I look at the growth down here, the profitable trade is 6.4% in profit. The losing trade is negative 5.1. So I would have a little bit of profit there. But let's see what happens. I'm going to push my luck a little bit. Okay, so it went up a little more. Now it's 7.3% profit and minus 4.1% loss. So I'm going to just take that off there. And that allows me to exit those two trades at a net profit. If hedging interests you, then be sure to watch this video. That's my beginner's guide to hedging in the Forex market. Now, a word of caution here, since you do have two buys on, you're going to have to watch this position closely and have a potential hedge of a sell below these levels here, just in case price does go down further. But again, knowing when to put on the same order will come with some practice, and if you see a strong momentum in one direction, then you can take advantage of two of the same orders instead of having to hedge 100%. Again, my name is Hugh. If you like this video, give me a thumbs up, subscribe, and hit the bell to get more videos about backtesting, trading strategies, and trading psychology. Thanks for watching.